Okay, so we're going to call this video Financing 1.5. There are some things that I did not cover when I was talking about before you go to the dealership, knowing your credit. In along the lines with those financial things, I forgot to mention a down payment and your actual payments, even if you're getting financing from a bank. So, one of the big things that I missed is a down payment on a vehicle and whether or not you should actually finance a vehicle. So if you're a person who is, you have limited bills or you have a lot of overtime or for whatever reason, you can put together and amass a lot of cash and you're not in desperate need of a vehicle immediately, you could potentially save up thousands of dollars in a year and buy a vehicle, outright. And I think that's a great option just because obviously you won't have payments. Your insurance is cheaper because you don't have to get full coverage insurance if you don't want to. There are several pluses to that. Now, with that being said, one of the reasons why, even if you're not going to pay, the full price for the car up front in cash and you have to do financing, you definitely want to put together some sort of down payment. Because what that does is that even empowers you, even if you're not financing through the dealership, which I've already talked about, you don't want to do. What that helps you do is that helps you have less payments or a lower loan amount, and so you're able to pay obviously less amount of money or a lesser amount of money over the period of the loan that you have. Because the more that you finance, the more that interest is going to hit, and in turn, the more you're going to pay on the rental, or excuse me, on the car that you're purchasing. A side note is, while I'm thinking about it, while you're at the dealership, when you have the financing together and you're going over the paperwork, you want to look for a page at the dealership that's called the Truth in Lending. It is required by federal law that that page be incorporated into your financial documentation or paperwork that they're going over. And that page, if you're financing a vehicle, tells you how much you're financing, what the interest rate is, and the total amount of money you're paying over the life of the loan. It's a real eye opener for a lot of people, and I highly suggest going over that. If you're not familiar with that, Google it, look it up, familiarize yourself with that. But back to the down payment. So I'm going to say something that may not make a little sense to you, but even if you can amass a lot of cash and put together a lot of money, I would say eight plus $1,000. If it's below that, I don't know if I would go to a dealership. Maybe I would just, if I could get close to that, I would just save up to buy a car outright. But you may not want to finance a car, or you may want to finance a car even if you can pay cash for it, just because it may tie up your capital and you may have investment opportunities and things like that that you want to take advantage of. So that's one reason why you may not want to put all the cash down on the car and leave your liquid assets low, or money that you might use to put into a business that you're starting up or something like that. You may not want to tie those funds up. Number two is if you're overextending yourself and you don't have any savings and you have a family, or you're just a person in general, if you have no money in savings, you have no safety net, no cushion if something happens, medical bills, catastrophic car issues, whatever, you lose your job, that can put you in a really bad situation. So you may not want to dump all of your cash into a car, but certainly putting some sort of down payment down will help you lessen what you have to pay over time. And also, it will a lot of times lower your interest rate. If you go to a bank and say, hey, I want to buy this car for 17,000, but I have five to put down. The bank will a lot of times offer you a lower interest rate, because interest rates are based largely on the risk that the financial institution is taking on financing you. So if you're buying a car worth $17,000 and you're putting down five, and then the bank is only having to finance $12,000, they're going to lower your interest rate because they're like, we're taking less of a risk. The car is already worth $17,000, so it's already covering the amount of the loan. We don't have to worry about depreciation so much. And instead of, say, a 8-point interest rate, you might get a 6% interest rate. Excuse me. So that's a really big deal. And then a lot of times you cannot even get financed if you can't put down a down payment, or some sort of collateral. And stepping into the collateral side, I would advise against trading in your vehicle unless you really don't want to take the time to sell. It's a beater car. You're not going to get, much out of it anyway. And that's a pitfall it's not a pitfall that I fell into. I was just lazy. I did not want to sell my car, and I got significantly less trading it in that I would selling it. But the problem for me is that I'm out here in a state where my nearest family member is like 700 miles away. I really don't have the time to tie up in trying to put a car on Craig's and do this and do that. So I took that hit. Going back, I probably still would have done it, just given the situation with my time and things like that. But I would say if you can sell your car, you can make a lot more money off of it, selling it versus what you would get at the dealership. Because, guys, keep in mind, the dealer has to make a cut off your vehicle if they're going to resell it, or a lot of times they're just sending it to an auction and just dumping it off that way. So they're not, there's nothing really in it for them, and so they're going to give you a lowball offer. So if you can sell it, you definitely want to go ahead and sell it. But like I said, definitely try to put together the largest down payment you can without largely inconveniencing yourself. It'll empower you to be able to get more financing. You can get a better car, and also, lower interest rates. Again, I just wanted to make this video because I missed those big items, when I was talking about financing and financials and credit previously. So, that's something I wanted to cover. Last note, if your credit is not that great, a down payment can be really helpful because you may be already paying a higher interest rate, and that'll get you to a more acceptable range. It may not be where you want, but it'll, definitely get you some points down off of, that 14, 15, or whatever percent you're seeing, so that you can get yourself in a better vehicle and hit the road in style. But anyway, guys, if you have any questions, comments, or you think something I said is just extremely stupid, put it in the comments below. I'd be glad to hear from you. What are your suggestions? What do you think I missed? I hope you enjoy the video, and thanks for watching.